Hello and welcome to another session of the My Solo 401k Financial My Community Daily Webinar Series. We're excited today to discuss now live. The government launches a database to find lost retirement accounts. As always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. If you have questions on this topic or even other topics, please chat those over, as we're happy to go over your questions and topics. In the meantime, we're going to dive into today's topic. We'll first set the stage to give an overview and put it in context. And the context is lost retirement accounts. So per published data, there are over 29 million lost accounts worth over $1.65 trillion, giving us an average forgotten balance of over $56,000. There is now a new Department of Labor database, which you can access at lostandfound.dol.gov. This database was created in response to the Secure Act legislation, with the public policy objective, of course, of helping to resolve the problem of all these lost accounts with a very high average balance. And we'll talk about some of the problems that those lost accounts presents and how a solo 401k can be a solution, at least for those that have lost accounts and are eligible to set up a solo 401k. The database was actually launched at the end of 2024, and you need a login.gov ID verification required in order to access the account or to access the database. So the steps would be to create a login.gov account if you don't already have one, access the database, which again can be found at lostandfound.dol.gov. You can also just do an old-fashioned Google search for DOL Lost and Found database, and I'm sure it'll come up easily. Once you're in the database, one searches using their social security number, review the results, which will include contact information for the administrators of the accounts that come up in the database. So you can contact those administrators and find out the process to roll out funds in your former employer plan or otherwise lost retirement accounts. Now, if you're eligible to set up a solo 401k, finding one of these lost accounts is going to present a tremendous opportunity. And we'll talk about some of the benefits of rolling over to a solo 401k. But before we get to that point, as I mentioned, you would need to not only have one of these lost accounts that you find via the Department of Labor database, but also be eligible to set up a solo 401k. So in order to set up a solo 401k, you need to be self-employed with no non-owner, non-spouse, full-time W-2 employees. Now, to demonstrate self-employment activity, you need to report earned self-employment activity on your taxes. For example, on Schedule C, if your business is taxed as a sole proprietor, maybe you don't have a formal legal entity, or maybe you do, but it's a single member LLC that's taxed as a disregarded entity where the income flows to your Schedule C. In other words, it flows to your 1040. You don't file a separate tax return because it's disregarded. Alternatively, if your business is taxed as an S Corp, earned self-employment income is W-2 wages that you receive from the S Corp. In addition, if your business is taxed as a partnership, earned self-employment income would be income reported on line 14 of a K-1 from the partnership. So you need to have that earned self-employment income with no non-owner, non-spouse, full-time W-2 employees. Now, you could have another business owner that's working in the business and they can participate in the plan, and that would still be considered a solo 401k. In addition, if your spouse is working with you in the business and reporting their own earned self-employment income, they can participate in the plan and it still would be considered a solo 401k. So the key is not having any non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. It's also noteworthy that You can have a solo 401k, even if you have a separate 401k plan through a day job. So if you have a W-2 job, but you have a side hustle with no employees working for any business owned by you or a spouse, if any, even though you're participating in your day job 401k through your daytime employer, you could still have a solo 401k for your side business. Now, if you have a plan, a solo 401k plan, like the one offered by my solo 401k Financial, then you can roll over eligible retirement accounts. So at a high level, the eligible retirement accounts are going to include former employer plans, which of course would be what you typically find on the lost and found DOL database, as well as non-Roth IRAs. So you can't transfer a Roth IRA to any type of 401k, including a solo 401k, because of the Roth IRA rules, but you can transfer pre-tax money in an IRA, as well as all types of funds in a former employer plan. So pre-tax former employer plan funds, as well as Roth former employer plan funds, can be transferred to the solo 401k offered by my solo 401k Financial. Moreover, we help our customers with the rollover process. So as you might imagine, the process is going to vary from institution to institution that has your former employer plan, that has your lost but now found retirement account. So we've tracked all that experience to make the process easy for you, right? For new customers or for existing customers that are now going through the rollover process. So we can say, okay, well, we've done this before with someone else that has a former employer plan, say at John Hancock or a TSP. And we can then make that process easy for you to roll it over to your solo 401k. Now, one thing that may not be readily known is that an old 401k or a lost former employer plan can be a hidden cost center. And why is that? Well, the fees that you might have experienced when you were employed, right, when it was your current employer plan, may have been subsidized. They may have been lower than the fees that are charged to ex-employees. So once someone leaves their job, the fees that are charged by, say, the administrator of your 401k plan may go up, right? Because they may be, the employer may have been subsidizing those fees for their employees, but once someone is an ex-employee, they may no longer subsidize those fees. So your administration fees may be higher on that former employer plan. Moreover, the investment fees, right? You might be limited in that former employer plan to just a narrow range of investments that might have, relatively speaking, higher costs, right? There might be, as well as fees that are charged for administration of that plan, right? That may only apply to former employees as opposed to current employees. So if you leave the funds in that plan, and then later when you go to withdraw the funds, say for retirement, the administrator may charge for a withdrawal. So if you can get the funds out of that former employer plan and roll them over to your solo 401k, that could lower the fees, right? Because now you could have those funds in a brokerage account at Fidelity or Schwab, right? Where they don't charge anything to open up the account. There's no maintenance fees. They have a wide range of investments, right? With low cost ETFs, or if you're looking to invest in other types of investments, right? If you not only want to reduce the cost that might apply to that former employer plan, but also expand the investment options. Because as we talked about, oftentimes with that former employer plan, the range of investment options may be narrow. Whereas if you're eligible to set up a solo 401k and then you roll over the funds to a truly self-directed solo 401k, like the one offered by my solo 401k Financial, now you're not only going to be able to invest in a wide range of brokerage type investments like stocks, bonds, mutual funds, etc., but also true alternative investments such as real estate, cryptocurrency, private placement, private equity, precious metals like gold, etc. In addition, there are other benefits of having the solo 401k, right? You can take a loan from a solo 401k as long as it's a solo 401k plan like the one offered by my solo 401k Financial that supports loans. So you could roll those former employer plan funds over to your solo 401k and then take a loan against it, where you're literally borrowing funds from your solo 401k account, transferring the funds out of your solo 401k account to your personal account where they can be used for any purpose whatsoever. And that transfer is not going to be subject to taxes or penalties as long as it's, number one, documented as a loan, which we handle the loan documentation requirements as part of our service for no additional charge, as well as paid back according to the loan terms. So those terms provide that you can borrow up to 50% of the balance, not to exceed $50,000. It needs to be paid back in monthly or quarterly payments. It's up to you. Equal payments of principal and interest. The interest is prime plus 1%, and those payments are spread over a 5-year term, unless you're using the funds to purchase your primary residence, in which case the term can be longer. What's noteworthy is that the loan interest is not being paid back to a bank. It's being paid back to yourself. It's being paid back to your 401k. So it's ultimately going to grow your 401k account if the loan is fully paid back. Another feature, another reason that one might want to roll over funds from a former employer plan is that now they could process a in-plan Roth conversion. So our plan not only allows for Roth contributions, as well as mega backdoor Roth contributions, as well as employer Roth contributions, which are all types of contributions where you're transferring funds from your personal account to the solo 401k as a contribution. But it also allows for in-plan Roth conversions, which is where you take money that's already in your solo 401k, that's already in that pre-tax account, such as pre-tax money that was in a former employer plan that was lost, but now found through the DOL database, which is then rolled over to the pre-tax solo 401k sub-account. Then once it's in the solo 401k pre-tax sub-account, the individual could convert that money as much or as little as they want from a pre-tax status to a Roth status. There's no income limits on how much you can convert. You can convert as much or as little as you want. Now that, of course, is going to be taxable because the funds are going from a pre-tax status to a Roth status. It'll be taxable for the year of the conversion, as well as reportable. So that in-plan pre-tax Roth conversion needs to be reported on a Form 1099-R. We handle that Form 1099-R reporting as an optional free service for our customers. They just need to let us know about that conversion, since we don't have access to their accounts, but they can easily let us know. There's a form on our website that they can use 24/7. It just takes a minute or so to give us the information we need to be able to prepare the 1099-R. And if they provided us that information at the time of the conversion, in other words, in a timely fashion, then we'll prepare that 1099-R as an optional free service for the customer. In other words, no additional charge. So that takes us to the end of the slides that we wanted to share today. I see that we got a couple comments. Take a look at those. If there are other questions or comments that you have, whether on this topic or other topics, please don't hesitate to chat it over. In addition, if you're finding this to be helpful, we would greatly appreciate it if you like the video, if you share it with others that might be interested in the topic. As you might imagine, there's a growing number of solopreneurs out there, so it can be really helpful information to them to help them take control of their retirement. So we greatly appreciate that if you like and subscribe, as it helps us to get the word out. All right, so let's pull up your account. We'll pull up your account and we'll follow up with you shortly after. Thank you so much for joining. Let us know if there's any other questions or topics. And we would invite you to subscribe to our channels. We do go live every day. So if you subscribe, you'll get notifications of when we go live. You can hear the content that we share every single day. You can also join and ask questions. We also invite you to our community. We have the largest community of solopreneurs and self-directed investors, over 30,000 members, which means we have a vibrant community forums. So there's a lot of great topics. You can see what other people are posting about, you can post your own topic. We also have a library of videos and webinars. So there's lots of great ways to learn and to share the knowledge on the community. So please don't hesitate to join. It's totally free to join. All are welcome. All right, as I mentioned, we'll follow up with the individual regarding the account-specific question shortly after the webinar. Thank you again for joining, and until next time, take care, everyone.